This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, Prashant. Morning. Nigel, morning. So we started the show and Prashant's asking me, are there any festivals?
Prashant, there is good news. Next week we have a longer weekend.
Monday is a holiday, right?
Monday is a holiday.
Guru Nanak Jayanti.
Guru Nanak Jayanti.
So,
I did not know that.
Yes,
Thank you.
it's a long weekend.
Suddenly Sonia's day brightened.
Suddenly my day
I
is bright.
come
Yeah.
from a part Punjabi home, so I know this very close.
But yeah, I mean, it's been good tidings for, the market as well, festival or no festival, right?
Absolutely. And I think, end of the year, the mood has been end of the year like, right? I mean, seasonally, it's a strong part of the year, something we've discussed over and over again. And I think that continues. Let me just quickly begin by telling you what you need to know as we start another session. So Qs are day-on-day Qs, which is basically what happened last night, are softish. I mean, it's not exactly a roaring handoff from Wall Street. Nasdaq was down about 0.6%. S&P was down about 0.25%. I think, you basically had a 5-day winning streak on both these indices, and that was broken last night. So nothing to really worry about. Was there one big thing which caused the markets to dip? Not really. So I'll just start with some data. You had, and this is surprising, US existing home sales fell in the month of October. The expectation was that there'd be a rise. Actually, the month of September also we saw a small fall, 2.5% fall. So there was a bit of a bounce expected, but actually sales fell by about 4.5% or so. So, probably at the margin, rate hikes are impacting, home sales. And of course, affordability and availability of inventory, etc., has also been an issue. You also had FOMC minutes which came out, which kind of made it sound like hikes are over for this particular cycle. This big global hiking cycle, it is behind us. Again, something we've kind of said over again from the last FOMC meeting. The minutes actually were from that particular meeting, which reinforced this once again. Now, of course, if you read the minutes, it looked like they all kind of think, the Fed members who decide on this feel that we need to hold rates for higher for longer. But the market is also starting to price in rate cuts in 2024. Now, in reaction to all of this, US yields were flat. That's what I'm saying. It was kind of neither here nor there kind of a day. 2 basis point change in the US 10-year. Oil was largely unchanged. It's been more down than up, $82.5 on Sunday. There is an OPEC meeting that perhaps will be closely watched and will be important. But for now, oil is at about 82.5. So these are global cues. Not a great handoff, but nothing really big time worrying as well. Now, just to circle back to levels here, the Nifty, by the way, has been ranged. Yesterday, we saw a strong rally, 100 points or so, but it's been ranged for a while. Now, you just have to see the daily candles for the last 5 or 6 days. The resistance, that big retracement that we're talking about from the all-time highs to the recent low, we are past all those levels. The last one was the 61.8%, the golden retracement. We are now trading above it. We are at almost 19,800. The resistance now is about between 19,850, very near-term resistance, 19,850 to 19,875, which is nothing but basically the upper end of this range that I'm talking about. And above that, I think the road clears up for all-time highs. Support comes in around the 19,685 levels. This is the 40-hour exponential moving average, which at the very least in the very near term should be used as a bit of a support if you're trading. Now, for the Nifty Bank, that's the index which has clearly been struggling. There, forget about the 50 or the 61.8% retracement. We are still around the 38% retracement of the full fall from the high to the low. And, what you need to watch is the low that we made recently, 2 or 3 days back, which is 43,450. And if that breaks, I think that opens up a fresh leg down. I'm starting with the downside level for the Bank Nifty, because that is clearly the weaker of the two indices. And it's been divergent, right? So now that's the level to watch, 43,450, a hold to that level. Perhaps, we live to fight another day. A conclusive break below that, we kind of open up more downside levels. Resistance for the Nifty Bank comes in. There is a significant gap area where the market kind of broke down from, which is again 3 or 4 days back. That range is 43,872 and 44,064. This is the resistance level which the Nifty Bank will need to take out. And of course, above that, you will have all kinds of retracement levels which we will put out, which we have been putting out, but of course to no avail because the Nifty Bank has been more weaker as compared to the Nifty. Just want to leave you with this one bit, and we'll discuss this quite extensively over the next 45 minutes till the market open. The first Tata Group issue in nearly 2 decades opens today. That is Tata Technologies. It's an ER&D company. We've got a few others listed in the space. One from the Tata stable, Tata Elxsi. The other, of course, has been KPIT, which has done phenomenally well. So a lot of action in the IPO market. And this is the big one that we will have our eyes on over the next couple of days. Sonia.
Oh, absolutely. And there was IRDA, which opened yesterday as well. That one, too, got a lot of traction, in the first day itself. So we'll talk more about that. But, the bulls are definitely in charge of this market. There's no two ways about that. If you map what's happened in the last 1 month, right, from the lows that we saw in October, the market is up almost 1,000 points. Look at that. The lows we hit was 18,857, and now we're almost at 19,800. Now, yesterday as well, the domestic institutional investors bought larger than what we've seen in the preceding few days. So DI has bought over 721 crores. So the money is coming in from there. And the US Fed minutes, the market has, I think, moved on. The Fed minutes have shown that there's no indication of rate cuts for sure. But the market has moved on. Yes, there was a slight bit of pressure in the US markets, but nothing alarming. As Prashant was pointing out today, the focus will be on the Tata Tech IPO. Now, remember, there is a lot going in favor for Tata Technologies. The company is debt-free. The fundamentals are very strong. It's in this growing ER&D space. The only worry that the street has is that there is concentration risk. So 40% of their business comes from Tata Motors as well as JLR. And that's perhaps the reason why the valuations are also reasonable compared to peers. So if you look at it, at the upper end of the price band, Tata Tech is trading at 32, 33 times FY23 PE compared to, say, KPIT Tech, which is in the same space, trading at 80 times. So there is that valuation headroom definitely. And it's also an OFS, so just keep that in mind as well. So this is, of course, something that the street will be focused on. A lot of the mid-cap tech companies in this space will be on our radar as well. Not just KPIT Tech, but L&T Tech, Tata Elxsi, all in focus today as the IPO opens. It's the first one from the Tata Group stable in the last 20 years, so there'll be a lot of talk about this. And the other one, of course, Nigel will talk more about that, but Coal India will definitely be on our radar. The company is guided for a 9% volume growth in FY25, so, the stock perhaps could see a little bit of action today, but more on that later. For now, at least, it looks like it's going to be a decent start, and the bulls just tightening their grip bit by bit in the market.
Well, that's right, Sona. Yesterday we did well, right? The Nifty ended higher in yesterday's trading session. The few factors that played out were institutions as the DI buying is outweighing the FI selling, and they bought close to around 260 crores yesterday. So that's point number one. The second factor is the FIs, they covered some shorts and they added long positions. So the swing factor out there between the long and short positions is close to around 5,000 contracts. And now you still have the short positioning at around 79%. What are they covering? It appeared yesterday there was some short covering on the Nifty Bank because the Nifty Bank actually ended higher with a gain of close to around 100 points. The Nifty Bank ended higher and you had the open interest that was down close to around 9% or thereabouts. Roughly around 2 lakh shares was shed out there. Now, in yesterday's trading session, you look at the IT index, well, that came off the high point of the day, and that's actually been a bit of an outperformer. So that was down close to 0.2%, while the Nifty Bank was higher. From a bullish perspective, you want both of them, to move in the same direction. Only then maybe we can head to around the 20,000 odd mark, because if you observe what's happened for this month as well, the IT index has done very, very well. But the Nifty Bank actually has been a bit of an underperformer. Nifty Bank is as flat as can be. In fact, the IT index, if you look at it just for this month, well, this is a 1 month chart, but if you look at it for November, it's up close to around 5% approximately. So you want both those two indices to move in the same direction. That's what will give the Nifty direction as well. Well, pulling up the options data then, let's pull up two strikes. 19,800 call, that's the highest open interest on the call side. And on the put side, you have the 19,700 put that has the highest open interest. And that should be the goalpost for this expiry that plays out tomorrow. That's the Thursday weekly expiry. So you just plug in the numbers going by these strikes. The recent high, that's 19,875. We saw this last week. That's a resistance node. The bears believe they can defend this. The bulls want to go ahead and conquer that. Going by the options data, 19,650. That's the crucial level on the downside. And the Nifty Bank, it's managed to defend the 20 and the 200 EMA on the downside. Now you'll want it to trend to around that 44,000 odd mark. If that's the case, maybe we'll see a bigger short covering bounce that plays out. So the bias is on the long side, on the uptrend, but you have the Nifty that has resistance at around 19,875 odd.
Okay, so those are some crucial levels to watch out for. But let's kickstart the show very quickly because it looks like it's going to be a good day for the markets. On the equities front, we have Vikas Jain of CLSA who says that during this reporting season, the CLSA analysts increased their FY24-25 earnings estimates for a slightly higher proportion of stocks than they decreased. He says CLSA analysts upgraded recommendations for 11 stocks versus a downgrade for only 8 stocks, and the consensus raised their FY24 Nifty EPS estimates by 1.5%, driven by oil and gas, auto and healthcare, while banks, IT, metals and FMCG saw earnings cuts.
Okay, we'll got more. Mahesh Nandurkar of Jefferies presents 27 top buys and 5 top underperform bottom-up ideas from their India analyst team. He says their top buys are ICICI Bank, Axis Bank, IndusInd, ICICI Pru Life, Bajaj Finance, Chola, Shriram Finance, Eicher, TVS Motor, Tata Motors, Coal India, L&T, Thermax, NTPC, JSW Energy and Brokerage Properties. There's also Bharti, Honasa Consumer, GCPL, Zomato, Sun Pharma, Piramal, Max Healthcare, Ultratech, Kajaria, and so forth. That's a mouthful, long list. He says that top underperform ideas include Mahindra, Cummins, Asian Paints, Gujarat Gas and Tata Power. Shorter list on the underperforming side. And of course, nearly 30 names on the outperforming side. So
I thought the entire show is going to be over and then you're still going to be talking about,
should I stop, not stop? So, well, let me just continue.
Picks. All right, more on that later. But on the bonds, Neeraj Gambhir of Axis Bank says a decline in US Treasury yields due to softer than expected inflation data led to a fall in domestic yields. Moreover, better than expected cutoff at the auction led to further rally, and the Indian 10-year benchmark touched a low of 7.19% during the week. Profit booking in GSEC and strong paying in overnight index swaps or the OIS took the yield to 7.27%. He expects the 10-year benchmark to trade at 7.2 to 7.3% range for the week.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit for now in our special Top 10 segment. For the time being, we run you through the list. We're looking at Coal India, IndiGlobe Aviation, GMR Power and Urban Infra, NHPC, Signature Global, Ganesha Ecosphere. All of them will be reacting to positive news flow, while on the flip side, TCS, Texmaco Rail, All Cargo and IDBI Bank could be a little under pressure.
Okay, well, we've got Jahangir Aziz now joining us, Global Head of Emerging EM Economics at JPMorgan. Jahangir, good to have you with us here. Thank you very much for your time. You know, it's that time of the year when I think outlook reports for 2024 are coming in. Not thick and fast, but they're starting to trickle in. And I think from what I've seen, what's top of mind is how the largest economy will fare. Will it be really... so there are two things. One, of course, is the belief that the hiking cycle is done. And second, what next? Will it be a sort of, smooth kind of transition? Or will there be, some rocky waters? So I just want to start by getting your thoughts there, Jahangir. How's it looking?
So look, in the U.S. economy, and you're right that, all of us would want to take out, publish our outlook before Thanksgiving Day. So we just published our global outlook and a U.S. outlook. Tomorrow I'll be publishing my emerging market outlook. So look, in the U.S. economy, we have a baseline, and the baseline is that of a soft landing. And we are attributing, a reasonably high probability that can be achieved. And alongside that, the Fed, in that view, the Fed remains on hold till about around June, and in the second half of the year, we have about 100 basis points of easing. So that's the baseline view. But alongside that, there is a view that talks about and has a material probability to it, and that's the view that look, it isn't going to be that easy, as you were alluding to. And not only will it be easing, the economy might be running much hotter. Employment numbers might be coming out much stronger than what is required to deliver a soft landing. And of course, with that, there is a possibility that inflation could inflect, bringing back the Fed into action sometime between now and 24. Again, middle of 24. But again, these are very uncertain. I mean, there's nothing really that can pin it down with some degree of certainty. And I think, therefore, between now and I would say the next 6 months' time, I think the data flow in the U.S. economy will be, as we call it, observationally equivalent. It'll be observationally equivalent to a soft landing and observationally equivalent to a hard landing. And I don't think that data is going to break in any particular direction that will allow us to identify whether we are in the good branch or on the bad branch.
Okay, just stand at the observation deck for now, right? For the foreseeable future. Got that. Jahangir, hi, good morning and greetings of the season to you. So just to reiterate, you believe that the second half of 2024 is when you're expecting 100 basis points easing of rates, correct? From the US Fed.
Yeah, that's good. That's the baseline.
Got it. That's the base case. Okay. Do you expect the RBI to hold rates as well till it clearly cites the Fed heading to cut?
I think RBI, along with all the other Asian banks, I mean, if you just look at the Asian central banks, right? They are the ones that did not raise rates as much. So the interest rate differential with the Fed funds rate is probably the minimal. It's at almost like a 15-year low at this point in time. And it's not just the RBI, it's Bank of Indonesia's BSP, it's Bank of Thailand, everyone. And that's because inflation wasn't really as big a problem in Asia as it was in Latin America or in Europe. And I think, but that very shallow, premium over Fed funds rate is going to hold all of these Asian central banks, including the RBI, from cutting, even if inflation comes down or if growth slows down, which is not the case in India. But even if growth does slow down, and I don't think any one of them are easing unless they actually see the Fed doing the first cut.
All right. Hi, Ms. Aziz. Good morning and good to have you. And, I was going to ask you what's the outlook for the next year, but as you said, you'll be publishing a note tomorrow, I think so. So we'll have to wait by, because sometimes the rate hikes, they take place, but the impact is felt in the next year, particularly for emerging markets. So we'll wait by for that. But three asset classes, which will be very, very important from an India equity market perspective. The yields, do you believe that, the 10-year yields have peaked out at around 5%? The dollar index as well, was around 107. We were a little bit worried. And Brent crude prices. So on these three asset classes, I mean, do you think that we have seen the highs for a while?
Right. So let me do with go by the reverse. So, Brent crude prices, if you look at fundamental demand and supply. So let's leave geopolitics out of this right now. So if you look at the fundamental supply and demand, you will need OPEC to cut really, really deep if they want, oil prices to replicate anything that happened this year. We are looking at, we don't think that is, a base case for us. And without OPEC cutting, oil prices look to be around 85, 86 in the first half and closer to 80 in the second half when, global economy slows, US slows much more materially. And so for the year as a whole, we're looking at 83. Now, again, geopolitics can turn that upside down. But so far, it's been very well contained. And so, again, to us, geopolitics or impact of geopolitics on oil prices is a tail risk rather than a baseline. And our baseline is that, as an average, we will probably do somewhere in the low 80s. On the 10-year, the 10-year looks as if it has peaked out. We have the 10-year going down from the 460s average for this quarter right down to 375 by the end of 2024. But again, this path is contingent on the Fed delivering 100 basis points of rate cuts in the second half of the year. If that rate cut does not come about, or if growth surprises on the upside, and remember, throughout 23, growth has surprises on the upside in the US, and as a result, that term risk premium has been added on. I think that if that doesn't happen, if we do get our Goldilocks scenario, which is nice soft landing taking place and 100 basis points of rate cuts in the second half, Fed fund rates, the 10-year rate should be around 325. And if that happens, 375, sorry. And if that happens, then I think in the second half of the year, you could see, dollar actually weaken considerably. We have dollar euro probably going towards 110 to 115 in the second half of the year, even though in the first half of the year, it'll probably be around 105.
All right. Thanks a lot, Jahangir, for joining in and, making sense of all the data points that we've got so far. Have a great day. We'll chat with you again very soon. So that's JPMorgan talking about a base case of 100 basis points rate cuts from the US Fed starting the second half of 2024. Let's step into a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Stay with us. Okay, there are plenty of stocks to talk about, by the way. Today, Honasa also comes out with its earnings. So, Mamaearth, the parent company, Honasa, comes out with its numbers. So, keep an eye out on that. But plenty of other stocks to talk about. Reema's here first up to tell us about TCS and why we should keep that on our radar. Reema, over to you.
Thanks so much for that. So, the company announced yesterday that they will be making an exceptional provision of $125 million when they report their Q3. Now, this provision dates back to a case way back in 2014 with a company called Epic Systems, where TCS was implementing a healthcare software for them, and Epic Systems had alleged that there was misappropriation of intellectual property. So the case, there has been a lot of back and forth between various district courts in the US, but now this appears to be final because TCS had appealed in one of their district courts and has been rejected. So they will be making a payment of $125 million as an exceptional provision, which will appear on the books in Q3. So that's negative news, and approximately this amount is about 2 to 3%, 2.5% of the company's full year EPS estimates, according to consensus expectations. So there will be that, hit on that. Back to you.
Okay, thanks a lot for that, Reema. So a bit of a hit to TCS, but Coal India, they had an analyst meet, and in fact, the commentary that came in was quite good. Volume targets, they have laid out 780 for FY24. And for FY25, well, they're talking about 850. The street is a little bit skeptical about the 25 target, but 24, everyone is mostly on board. In terms of e-auction, they're expecting it to contribute close to around 15% of the production. For the first half of the year, it was around 9% approximately. Evacuation focus, that's very, very important because they produce more, that's good, but they need to send that and dispatch the coal that they make as well. So they're working on developing sufficient rail infrastructure to support sales volume growth. And on the cost reduction initiatives, they are expecting the employee count to fall by close to around 5% annually over the next 10 years, and they've achieved close to around 4% over the past 10 years. Now, FSA price hike, some part of the street was hoping for it, but given that it's an election year, it's unlikely that we see FSA price increases, and they've clarified on that. The next 6-7 months, we shouldn't see that. The capex plan for 5 years has been laid out at around 80,000 crores, so roughly around 16 to 17,000 crores on a per annum basis. Most brokerages, they have a buy rating on the stock. The target prices come up for you on the screen.
Okay, well, that's about, the stocks to watch. But there's another stock that we're looking at this morning, which is Indigo. So let's take a look at that. Green on Indigo this morning because of the kind of volumes that we've seen in passenger traffic. So the stock is up about 15% in the past 6 months, and the stock is up 44% in the past 1 year. The domestic traffic has hit a record high for the third straight day in a row. So the data we have for November 20th is that domestic airlines have carried almost 460,000 passengers on November 20th, and that's the highest single-day air traffic that we've got. The Aviation Ministry has tagged it as overwhelming amount of passengers that have flown this time around, and that's something that perhaps could keep a lot of these aviation stocks up and about. Remember, Indigo has more than 70% market share in monopolistic routes, and overall it has about 60% market share in the aviation industry, so I'm going with green on that stock. But let's toss it to Vivek, who's talking about Texmaco Rail this morning. Vivek, over to you.
Well, good morning. Last evening, Texmaco Rail, told the exchanges that, they were going ahead and launching a QIP. We have access to the term sheet, and sources indicate to us that this particular QIP, the company is looking to raise close to 750 crore. This includes a base size of 550 crore and an upsize option of another 200 crore. The key point is, the indicative price at which this particular QIP is being launched. The indicative price is 129.1 rupees a share, which implies almost a little over 13% discount to yesterday's closing price. So the dilution, if the base size is what is being considered, is 13.1% of the total equity capital, and if the upsize option is exercised, it is 17.86% dilution. Why does the company need funds? Number one, for capex, company plans to purchase new equipment. Number two, to repay certain borrowing, and number three, for funding the working capital requirement. Going with the red on this particular name on account of the discount being given for the QIP.
Okay, well, Vivek, thank you very much for that. We'll watch out for this one. All Cargo Logistics is the next one. Mangalam is here with details. I think we had volume numbers for the month coming through. Mangalam?
That's correct. So All Cargo Logistics reported the monthly update for the month of October, and this time around it's weak. October is seasonally weak, but this was weaker than that as well because we saw an 8-month low on their overall, less than cargo loads volumes. In fact, we had the month of October 2023 which saw the volumes decline by 4% year-on-year and 3% month-on-month. And this despite the volumes being augmented by about 1.5% on account of the acquisition that the company made in January itself in Germany. So if you take that down, then the volumes are down 6.5%. The company said that October, while it's a seasonally weak month, but they expect near-term demand to be muted as there is no respite in terms of demand conditions in the near future, as a result of which going with red on all cargo.
Got it. Thanks a lot for that, Mangalam. Well, let's go back to Vivek. Vivek, tell us about some stocks that you're tracking.
Well, quite a few stocks on our radar, on the back of news flow. First on our list, GMR Power and Urban Infra. The company has gone ahead and increased its stake in its subsidiary GMR Energy. The stake has been purchased from its Malaysian partner named Tenaga, and the company's stake now increases to 86.9%, indicating that the company is buying a further 29.14% stake in the company, and for a total negotiated consideration of $28.5 million. So now what actually happens is that the company would be able to fully consolidate the earnings of GL into its own books, and on the account of that, you will see some accretion coming through. The other stock on our radar is NHPC. Remember, on account of the Sikkim flash floods, the important project that the company was undertaking construction on, that is, the T-Staff 6 hydroelectric power project. Now critical head race tunnel works have resumed, so some positive news flow coming in for NHPC. IDBI Bank, some negative news flow. The government has cancelled the bid for appointing the asset valuer for IDBI Bank's divestment. A fresh RFP is to be issued, and the government is also reworking the terms and conditions that qualifies bidders. They're going to relax the norms for this particular divestment to go through. Also, Signature Global, yesterday a large play took place over there. Aston Capital VCC sold close to 11 lakh shares. Nomura India Investment Fund bought the entire stake from there. And lastly, Ganesha Ecosphere, going with the green on this particular name as well. Company is looking to raise funds. The board meeting is held on November 24th. All options, including a QIP and a preferential issue, is on the radar.
All right, thanks a lot, Vivek, for that. Well, here's a quick recap in case you missed out on any of the stocks with positive news flow. There's Coal India, Interglobe Aviation, GMR Power and Urban Infra, NHPC, Signature Global and Ganesha Ecosphere. While stocks with negative news flow are TCS, Texmaco Rail, All Cargo and IDBI Bank. But there's also a handful of brokerages that we have this morning. And if you want to get your daily dose of brokerage views, Hormuz is right here to give us that lowdown. Hormuz, morning.
Good morning, Sonia. And I'll start off with something that you track pretty closely. That's Tata Motors. And CLSA has come out with a note on that. It has a buy rating on it, and it has a price target of 841 rupees, which is the highest on the street for Tata Motors. And the note is pretty JLR-centric, and it says that JLR reported a 14.1% improvement in retail volumes for the month of October, with UK volumes rising 65% and those in the European Union going up by 29%. And it also says that the third quarter volumes for JLR are slightly lower than the second quarter, but continue to remain at healthy levels. It also mentions that the discounts have risen, but they are not as significant for JLR for them to be worried about. And for the net debt, the JLR's net debt has come down by around 300 million pounds, and it looks set to turn net cash positive by FY25. Now, Tata Motors will also be in focus because of the Tata Tech IPO opening today, and it is also the top performer on the Nifty in 2023 with gains of around 75%. Next up is Bernstein, which has an underperform rating on Divi's Laboratories with a price target of around 3,064, which is a 17% downside from current levels. And it says that the cross reads from global peers indicates that there is continued pricing pressure in generics and inventory destocking at customers, which could affect the order inflow and margins for the rest of the year. And it is because of this that Divi's, unlike its other Indian peers, has not been able to benefit from lower raw material and freight costs. Now, although the management has guided for 2 new custom synthesis projects scaling up in the next few quarters, but Bernstein says that the visibility for them remains very poor. And it also lastly says that the market exuberance for the stock is unwarranted, and Divi's as a stock is up 10% this year, but 7% of that has come only in the last 1 month. And lastly, a pretty interesting note on Varun Beverages that has come from BofA Securities, where it has maintained its buy rating and raised its target to 1170 rupees, which is also the highest on the street. It says that the solid execution continues from the company and significant penetration opportunity also exists, and benign input costs, favorable mix and backward integration should continue to support margins. And interestingly, the management also said that 40% of their existing portfolio now is no sugar or low sugar. And lastly, Varun Beverages is up 55% this year, and it has delivered positive annual returns every single year since it listed in 2017. Back to you.
Okay, all right. Thanks a lot for that, Hormuz. Well, Manisha Gupta joins us as well to tell us what's going on in the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'll start with the crude oil prices, which are trading steady, and this is ahead of the OPEC meeting on 26th of November. Apart from that, it also has to do with the 7 oil companies impacted at the Gulf of Mexico due to oil discharge of almost 1 million gallons. Remember, the prices had declined 16% since the end of September, so that there is some buying and some buying fundamentals as well that you can see in crude. But the real action really is clearly in case of metals there. You have seen the dollar index decline to a 2.5-month lows. The 10-year Treasury yields are trading at a 2-month lows as well, and that has been supportive. China leaving prime rate steady, as expected, also has been supportive. So you have the copper prices now trading at around 2-month highs. Copper also is taking support from disruption at mines in Peru and Panama. And within the precious metals, it is $2,000 an ounce back for gold. We saw 2% gains for silver, platinum as well. So there is a strong support because of the weakness in dollar and the expectation that the Fed will not hike rates in the month of December now.
All right.
Okay, well, Manisha, thanks very much for that. We'll take a quick commercial break here. We are back. Deven Choksi, Managing Director at DR Choksi Finserv, will join us for a fundamental stock analysis. After that, we'll have the management of Nazara Technologies joining in to discuss the business outlook post-second quarter earnings. Stay tuned.
Welcome back. You're tuned in to Bazaar Morning Call. I hope you're having a good morning. Well, Deven Choksi, or MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning. Thanks so much for joining in. Well, plenty of stocks to discuss. Let's start with Coal India. That's been a rank outperformer, in this year so far out of nowhere. Plus, it's given a dividend of more than 15 rupees. Some brokerages are even working with 30 rupees for the year. That would mean another 15 rupees in the second half of the year. At around 330, 340 rupees, do you think bulk of the good news is in the price? Or do you think it still has to play out at this 6 to 7 times PE multiple?
And Nigel, good morning. Well, I think from the price point of view in the stock market, I think the stock has been a rank underperformer in the last so many years. And of late, I think once the government systematically ensured the higher amount of production from Coal India and supply to power plant, then after I think the progress of the company as far as I think the working is concerned has remained by and large steady. And that gives a slightly better hope than what it used to be earlier, wherein the performance would remain quite erratic. Given the situation that I think the performance could remain sustainable going forward, I think re-rating definitely was asked for, and market has actually I think done good amount of re-rating for the stock. In my viewpoint, I think the commodity stocks we don't expect I think too big an improvement into the rating, but 6-7 times ratio I think could possibly expand to 8-9 times. I think that is distinctly possible. So to a greater extent, I think one could possibly wait for relatively better price than what it is currently, and wouldn't call it as a fully priced at this point of time. There is a headroom left, I think, for sure, as far as I think the stock price is concerned, given the strong backing of the fundamentals now that this company is achieving.
Okay. Deven, hi, good morning, and thanks a lot for joining in. The Tata Tech IPO opens today, so I wanted your thoughts on whether you would subscribe to it, and also what do you do with some of its peers, right? KPIT Technology, Tata Elxsi. Your thoughts on this entire sector?
Yes, Sonia, good morning. Well, I guess I think the entire engineering R&D space remains quite favorably positioned, and different companies have different models to follow, including the LTTS, LTIM, who are having, I think, some business on this front as well, and at the same time, Tata Elxsi, Science Technology, and likes of KPIT. The Tata Technologies, I think, distinct advantage, as I see, is an end-to-end supplier of the entire engineering services to the OEMs. And that is where probably I think this company is really positioned more better and focused at this point of time. I believe that I think this situation is going to give them more amount of I think visibility on the new contract, particularly because of the generation of vehicles are changing. Up till now, we have seen electric vehicles I think coming in, replacing the ICE engines, and I think more or less in the same chassis I think this vehicle would come 2025, and most of the OEMs are expected to bring up the vehicle chassis and the entire body, which is meant exclusively for the electric vehicles, and that is where I think the new generation of EVs are going to create better amount of business prospects for companies like Tata Technologies. And at the same time, I think the vertical focus on the aviation space also demands, I think, a good look as far as I think the business outlook is concerned. So given the possibility and given the valuation at which this company is coming up into the market with IPO, which is far more inexpensive, as I would call it, as compared to the peers, definitely demands to subscribe into the portfolio and buy, I think, once it gets listed further.
Yes, you were talking about the aerospace and transportation space, right? I mean, 30% of Tata Technologies business comes from aerospace and transportation, apart from autos. So that's also a big space to focus on. Since we're talking about aviation, Deven, what about Indigo? Third day running now, domestic traffic has been at a record high. Despite the 15% rally we've seen in the past 6 months, would you still buy the stock?
One should hold on to the stock, definitely, for sure, because I think on one side, the aviation fuel prices are remaining under control, and that's a good news, because that is where probably I think this company has probably seen relatively better amount of I think stability on the operating side. At the same time, the contribution coming from food and beverage is part of selling in flight. I guess I think that is also increasing, and that is contributing sizably to the performance on the revenue and the profit side. More importantly, given the kind of the traffic that they are experiencing at this point of time, I believe that I think this company is heading for better times. More aircrafts, more airports, and I think higher amount of traffic along with operating metrics that we are talking about, all of them put together is a recipe for better tomorrow for company. And that's where I believe that I think one can possibly hold on to the company and buy during the dips, even though the stock price is corrected somewhat. I would think that I think one should buy during the dips into the portfolio.
All right, stay on. Devin, I want your thoughts on Nazara Technologies as well, but we have the management joining in, so let's get talking to them. It's the first corporate on our radar today. For Q2, the company actually witnessed a decline in ad tech revenues, while the margins were also lower sequentially. The management in the conference call said that the second half will see a pickup compared to the first half. Nitish Mittersain, the joint MD and CEO of the company, joins us now to talk about that. Nitish, thanks a lot for joining in, and greetings of the season to you and your team at Nazara. Can you first start by talking to us about this fall that we've seen in ad tech, and what is the prognosis now? How long do you think this weakness could last?
Sure. So as we mentioned earlier, we lost client that was a large one for us. It was a relatively low margin client for us. So I think that's the reason you're seeing a decline in revenues and also the EBITDA delivered by that business. But we're seeing a steady improvement over there. We expect Q3, Q4 to be much improved, and the coming year that business to recover. We've got new products launching. The product margins are much higher. So the overall gross margin profile of that business is improving a lot. So I think we're very much on track to recover that and grow again.
Can you explain to us the reason behind losing that client? Was it because, was there some industry-specific issue? Was it because of the demand situation? And also, if you can tell us, your ad tech, in the last 4 quarters, the revenues were about 130 crores or so.
Yes.
What percentage of this would be low margin?
Sure. So it was a US-based client which got acquired by a larger group, and that group had its own internal resources to manage the business. So it was nothing specific to do with our service that was being provided to them. In terms of the lower margin business, it contributed to about 30% or so of our revenues.
Okay. All right. Well, Nitish, good morning. Nitish, the second half of the year is going to be much better. If I compare the second half of this year with the second half of last year, what kind of a growth will you be looking at? I think last year, roughly, you did approximately 605 crores approximately. So how much better can this second half be?
Look, we're hoping to do better, but we've not given out a specific guidance. But if we take a step back, I'd just like to take this opportunity to talk a bit about the gaming opportunity in India. We have about 500 million gamers today, which are expected to grow to 750 million gamers by 27. And gamers are spending today 100 minutes on average a day playing games, which is much more than OTT time spent watching OTT and TV, etc. So I think gaming is becoming dominant force of entertainment in India. And I think that's what Nazara is really building out. We're not working on quarter to quarter. It's important for us to deliver revenues backed by profitability, as always has been. But for us, the bigger picture is India is going to emerge as a very dominant gaming player globally, and how do we continue to play a vital part in it.
Okay, that's a big, very ambitious plan. You're saying 500 million gamers in 2023 and expected to go to 700 million gamers by 2027. So you have about 1,300 crores of cash on your books, right? Including the money that you recently raised from a couple of influential investors. What are you planning to do with that? Any M&A plans that you have in this or the next calendar year?
Yes, of course. As you know, we're a profitable cash flow generating company, so we don't need to use our capital or reserves to fund any losses. So much of the capital will be used for driving additional M&A. Nazara has a strategy of acquire and grow, which has worked very well for us, and we are surely going to double down on it. We built a strong pipeline, especially in core gaming studio IPs, esports space, and perhaps a little bit in ad tech as well. So we're looking at all these opportunities and hope to conclude some transactions in the next couple of quarters.
All right. Nitesh, but this GST regime, it's impacting the real money gaming. For you, obviously, it's not that large. But could you tell us, how do you see this panning out, and what kind of impact have you seen so far, and what kind of an impact are you likely to see going ahead?
Sure. So the real money gaming contributes to about 4% of our revenues. So it is a minimal impact from a Nazara perspective. And we are actually seeing this as an opportunity rather than a problem. as you know, all along we have been, very cautious about our exposure to real money gaming because there was unclarity on regulations and taxation, and we were being a bit conservative. Now that there is more clarity that has emerged in terms of how GST, etc., has to be applied, I think Nazara will look at this space more aggressively to invest in it and to grow it because the overall opportunity in terms of monetization is very large.
All right. Just before we wrap up, how many minutes you said that people spend on gaming now, and how much is it expected to go up to?
From reports that I have read, it's averaging about 100 minutes a day. I know a lot of parents were not very happy to hear that, but it is the reality, and we expect that gaming will continue to be important source of de-stress and relaxation for Indians on their mobile phone.
All right. I mean, I can attest to that. 100 minutes? What's 100 minutes? It goes with that. Well, thank you very much for joining us, and great to have you with us here, Nitesh, with that perspective. Well, let's go across to Anuj, who's here with a quick check on the trade setup and how he's looking at the markets. Anuj, morning.
Morning, Prashant. My iPhone analytics just told me that I spend about 2 hours a day. I don't know what the answer was.
No, he was talking about particularly gaming.
No, I'm talking about the games that I have on iPhone, not the games that you were talking about on those skill-based games. I'm not talking about that. I'm just talking about pure entertainment games. Even that is 2 hours a day, which I need to cut down, by the way. Anyway, coming to the cues. Of course, the US Fed didn't indicate, the minutes didn't indicate that there would be any rate cut. But I think that is anyway next year's story. I think the market perhaps needed a correction to fall, the US market that is, after 5-day rally, and that's what it got. The housing stats data is clearly showing that cuts will happen, maybe in 2024, as early as March, whatever the Fed might say. And that, I think, clearly is something which the bond yield reflected. The US bond yield actually yesterday still ended at day's low. So that in itself is telling you that the overall view is still that the rate cuts will happen. And that itself is positive for the markets. But maybe there was a reason for correction which was needed. In terms of data, yesterday there was in index futures buying of about 668 crores and stock futures about 2286 crores. Normally, when you see buying in both index futures and stock futures, the market normally sees some kind of consolidation. And if you see within index futures, there was long build up, and mostly in Nifty. Nifty has seen buying of 824 crores, while Bank Nifty has seen selling of about close to 150 crores. And there was long build up and there was short covering, both which was witnessed in yesterday's trade. As a result, the net long short is down to 21% and 79%. 21% long and 79% short. Still a heavily short market. Coming to the levels then, on the Nifty, the first support is 19,754, and with a bit of a minor gap up, you get a bit of a cushion above that. And the bigger support is 19,675, which is based on the options data, tomorrow being the weekly expiry. On the Bank Nifty, where we have the weekly expiry today, the traders need to respect the boundary. And the boundary is 43,877 on the upside and 43,445 on the downside. You need to smartly play this range for one more day, and after that, perhaps a positional view will emerge on the Bank Nifty from tomorrow.
Okay, all right, Anuj, thanks a lot for that. For the time being, we slip into a short break. On the other side, Mitesh as well as Sudarshan will be joining in for a technical check on the market. Stay with us.
Welcome back. Mitesh and Sudarshan are with us to take us through what they make of things as we begin this Wednesday morning. Gentlemen, good morning. Great to have both of you here. Mitesh, to begin with, how are things looking? And, also, just comment on the divergence we are seeing between what the Nifty is doing and the Bank Nifty is doing, and how will this resolve?
Morning, Prashant. I think the problem with the Bank Nifty is that the announcement on Friday kind of, saw a big gap down on the bank index. And then what we also witnessed was technically the indicator setup on the hourly, 2 hourly and the short-term charts got negative, while Nifty has turned flat. So I think maybe a few more days of underperformance by the Bank Nifty is likely. And, once there's some base building, then I think we'll see a reversal. So between the two indices, I've been, looking to short the Bank Nifty at higher levels, closer to about 43,800, 850 zones. And on the Nifty, I believe that the range of 19,650 to about 19,620 on the 19,620 on the downside will continue, and on the upside 19,850 will be a formidable challenge. So I think the Nifty will continue to be sideways for the next few days, while the Bank Nifty I would still want to short it out. So the idea is that you look at some kind of reversal on the Bank Nifty. Till that happens, maintain a negative bias.
Okay, Sudarshan Sukhani is also joining in now. Sudarshan, hi, good morning. Your thoughts on the kind of run-up that we've seen, right? I mean, it's been quite drastic. It's almost a 1,000-point up move from the October 26th low of 18,857. Do you think there are more legs to this rally, or now do you expect a consolidation phase?
Yeah, good morning, Sonia. See, there are more legs to this rally. We are also entering into a seasonally bullish pattern period. So I would expect the markets to cross that threshold of 19,850 sooner or later. For the immediate, time frame, it is possible that the Nifty may consolidate. It's been a big rally. There is a pause, there is a consolidation and a renewal of that rally. That's a normal process. But assuming, and I'm going on the assumption that this market is likely to break out of 19,850, 19,900, that resistance area, the trade remains to buy dips in the Nifty. That's all. We had narrow ranges for last 2 days, and that range was broken out on the upside yesterday, although it did not sustain, but still the breakout did happen. So we are getting small signs that the Nifty is willing to go higher. Now the time it takes is something that the market decides, but be long. And similarly on the Bank Nifty, completely avoided. I have not the faintest idea what it is doing.
Okay, all right. Noted that view, gentlemen. Sudarshan, go ahead and give us some stock picks, stock calls for the day, please.
Yes, surprisingly, I have an all-buy list. It's not because I'm so bullish. I'm not. I'm expecting a consolidation. But there are a lot of stocks that are now giving buy signals. That's interesting. As I said, we are entering into a seasonally bullish period. Voltas is a buy. It had a 1.5-month consolidation. It broke out yesterday. It's probably looking at much higher levels. Buy with a stop at 830. SRF is a buying opportunity. It had a big rally just similar to the Nifty. It's consolidated for 3 weeks, and the chances are that it will break out of that consolidation. It's not done that, but it should. Buy with a stop under 23.25. SAIL has a bullish head and shoulder pattern. It's been confirmed 2 days ago. It should look for much higher levels. Buy with a stop under 88. And that large cap Reliance, it's come in my list 2 days ago also, has a similar bullish pattern from which it has broken out. Reliance is a buy with a stop under 23.55.
Sudarshan, thanks for that. Mitesh, what about you? What's on your list?
Yeah, I have 3 buys to sell. On the buying side is SBI Life. The stock broke out a couple of days back, is making new highs and still showing very good momentum. So a fresh long can be taken with a stop below 1400 for targets of 1475. A buy on JSW Steel with a stop at 765 for targets of 795. And also a buy on MFSL, which made a fresh swing high. Keep a stop below 960, look for targets of 1020. And one sell again from the finance and the banking name is Chola Finance. We've had sell earlier on this stock as well, last couple of days. So now can be shorted with a stop at 1126 for a target of 1055.
Okay, gentlemen, thanks a lot for that. Well, let's do one thing. Let's take a short commercial break. On the other side of the break, we'll have the pre-opening rates. We'll also connect with Gurmeet Chadha of Complete Circle Consultants to talk about the IPO rush on Dalal Street. There's a big one that opens today, Tata Technologies. Let's find out more about that in just a bit. Stay tuned. Welcome back. We have, I think, less than a few minutes before the pre-opening rates kick in, expected to be a good one. But Sneha Seth of Angel One is joining in now to give us a couple of cues in the F&O market and overall for the market as well. Sneha, thanks for joining in. 19,800 has been a bit of a hurdle for the market recently. Do you think we can get above it this time? And what are the levels, what are the stocks to watch according to you today?
Very good morning, Sonia. If you see market, though Nifty has been showing some strength, but if you see banking index has been recently underperforming, and until we don't see any movement or any buying interest in banking space, it will be difficult for Nifty to surpass 19,850, 19,900 zone. So that is the important thing for now. We need to keep a close watch on banking index. Any move beyond 44,000 would trigger some momentum. Till then, one should focus on individual counters, and my top pick would be a buying pick again. From the first counter would be Sun Pharma. Sun Pharma, if you see, it has hit fresh record high yesterday, and it looks poised for an up move, seeing the open interest concentration on the call side. I believe we can buy this counter with a strict stop loss of 1185, and the target can be expected around 1227. Apart from this, I'm liking Voltas. Again, this counter has been consolidating, and it has come up with a consolidation phase. The volumes were decent yesterday, so I would recommend buying 840 call option here in the range of 16 to 18 with a strict stop loss of 9, and the target expected is around 39.
Okay, all right. Sneha, thanks a lot for joining in and giving us those calls on the index as well as a couple of stock calls. Well, the Tata Tech IPO, that's the first one that's coming from the Tata Group in over 20 years. That opens for subscription today. Rima joins us to run us through all the details of this particular deal. Rima?
Thanks so much for that. Well, there's so much excitement surrounding Tata Tech, right? The last Tata IPO was in 2004 when TCS, hit Dalal Street. Just a quick word first on the issue details. IPO opens today, closes on the 24th. Price band 475 to 500 rupees. With this, the market capitalization will be just a little more than 20,000 crore rupees. It's a pure offer for sale. The company is looking to raise 3,042 crore, which will be given to the promoters like Tata Motors. So Tata Motors will, make the chunk of the money which will be raised by this offer for sale by nearly 2,300 crores. So the issue size is 3042. It's a pure offer for sale. No money goes into the company. But remember, this company has cash, right? Cash in books is close to about $150 million. Now, what does the company do? Well, it provides engineering and R&D services largely to manufacturing verticals. In that, the key vertical is automotive, which contributes more than 50%, majority of their revenues. The other two verticals they cater to are aerospace, and the other one is heavy machine and construction. Now, for example, of the kind of work that it does. Now, for Tata Motors, it helped convert their existing ICE vehicle into an electric vehicle. So they help integrate EV components like your battery, your charging socket, and the other electronics which you need in an EV vehicle into the existing base car of ICE. So that entire engineering, that research, design was done by Tata Tech. Now, on the financials, the top line of the company was 4,400 crores last year. The growth rates have been steady. In the first half of the year, the company's constant currency revenue growth has been about 28.5%. Last year, the company saw a growth of 24%. Margins have been in a band of 18 to 19%. For the last 2 years, but compared to what it was about 3-4 years ago, there has been a pickup in margins. Now, one thing to note is that this is a Tata Group company, and their two anchor clients are JLR and Tata Motors. In fact, the company perhaps was started to provide all the automotive, requirements to companies like, Tata Motors. So JLR and Tata Motors together contributes about 38% of their overall revenues. It's a cash in the book. It's a cash-rich company. Cash in the books is $150 million. And its peer set includes IT ER&D companies like KPIT Tech, or Tata Elxsi, LTTS. Now, there is a difference in the segment business composition of each of these companies, but purely looking at the valuations are cheaper than the listed companies. Back to you.
That's a fantastic introduction, Rima. Thank you very much for that. Well, let's get in Gurmeet Chadda, who's now joining in to talk about this one. Of course, the other IPOs which are opening up as well. But of course, Tata Tech will garner bulk of the attention. He's managing partner and CIO at Complete Circle. Gurmeet, good to have you with us here. Good morning. What do you make of the Tata Tech IPO? I mean, if you look at growth rates, etc., they're not too hot, right? I mean, they're not very strong or anything compared to the other companies in the space, say Tata Elxsi or KPIT. Growth rates actually are far lower. Margins at about 16.5% odd. Strong, but not extraordinary. But what in a way works in Tata Tech's favor is valuations. I think it's coming to you at about 28 times, under 30 times basically. And if you compare it against, say, Tata Elxsi or actually KPIT is now 80, 90 times, depending on forward estimates. Is that the big USP? I mean, at least on day one when the issue opens, that it's available, is it cheapest in that space, or there's more? Go on.
Hi, Prashant. Thank you for having me over. See, I think to start with, yes, valuations are compelling, but it's not comparable to KPIT and Lexi, and that's why we should not, although it looks similar. So it's a full vehicle platform, starting from concept to mechanical engineering, their hard engineering platform, software, embedded software integration, including live factory monitoring. KPIT and Tata Elxsi are more software. Right? This is a complete value chain. This is basically digital engineering services. So they can start with launch of the product, including ideation of the product, to the end use of the product. So that way, so we were fortunate. My colleague Aditya visited their site in Pune, and we were quite amazed by the kind of work they are doing. So look at it this way. Now you give all features in a car today. So let's say a normal car has 30 ECUs, which is electronic control units. A good car, high-end car would have 70, 80. And a super high-end like Tesla will have probably 100 ECUs. Now they can integrate everything, including your braking systems, infotainment systems, your heating system, etc., and capture all that data. So let's say if you are in a Jaguar, it can capture, your braking things over high terrain. It can capture tire pressure, etc. And that data can then be monetized. So let's say, for example, a car, you get a car with all features today, but you only want to use heating in winters, right? So it allows you that, they call it as a digital cockpit. So it is just more beyond than, just giving the software integration. It's end to end, and they only provide services. So let's say, for example, autonomous driving, they won't develop it, but they will integrate it for you. I just saw Rima mentioning they converted TIGO in Tata to the EV platform. So they specialize in conversion there as well. So it's a complete, as I said, complete value chain, they offer. Recently, I met their CFO, and they talk about how they converted Air India, normal planes to cargo planes by reverse engineering and producing spare parts. So look at it this way. This is a auto digital engineering services confined to auto, that automotive value chain, and offers host of features, including ideation. You can monitor your live factory. The robots are self-healing. I was quite amazed with what the stuff they do. And I think this company could be quite a bright star. The only sad part is that the issue is small. Probably on listing itself, the near-term gains could be probably taken care of.
That's true, right? Everyone's just wondering if they'll get allotment, which looks tough at the moment. But no questions about the strength of the business and the whole story. Gurmeet, just trying to play the devil's advocate here, right? The one risk that people talk about is concentration risk. So 40% of their business comes from Tata Motors and JLR. So the question is that why have they not diversified before? And is this the reason why the valuations are also looking attractive compared to peers? Your thoughts on this?
So I think it's a strength in a way because, once you have JLR, so for example, on Tata Motors side, there are 3,000 people on site. So their on-site ratio is the highest. It allows them to work. They don't compete with OEMs. They actually help them integrate and, add value add, which in my view is a strength. At some point of time, you will find there is a lot of competition, with each company building their in-house platforms. So I think their on-site mix is the highest, which, a lot of this is confidential. You develop new models in cars, new features, and that allows them to get that share. And out of 35, they work with almost 35 OEMs. 12 of them are actually new age. In fact, you look at China, for example, NIO, which is the largest battery swapping, they help them integrate. And as I said, the big money could then be made on the subscription services. Everything will become digital. You can, for example, to tire companies, you can sell, what is the tire pressure for cars in different terrains. All of that data can then be monetized, and a lot of subscription features can be given. It's like the way you use Netflix, right? You can call it, they have this feature called connected in a car. It's like Alexa in a car, right? A lot of that can happen. So I think it's a very futuristic company. And once it gets listed, probably you understand more of it. In the unlisted space, you only get limited access in terms of interactions. But as you hit the market, so I'm pretty excited. I think valuation, obviously, as Prashant said, very good starting point. This year, they will already make 700 plus crores profit. 20,000 crore market cap on listing, probably one third of the valuation of the peers.
Okay, Gurmeet, before we let you go, KPIT, you all got it bang on. I think it's a doubler or maybe a tripler for y'all. But are you tempted maybe to take some money off the table from KPIT, allocate some money to this IPO as well? Is that something that you all would think about, or do you want to stick to KPIT and continue to play that one?
No, but Nigel, I think both. So we probably want to trim something because it's gone up too fast for our comfort. Almost as you said, two and a half, 3 times within a year. So probably want to trim it a little bit. But as I said, digitization of car, electrification of car, to me is a very, very long-term theme. And KPIT again, as actually keep upping the guidance in a tough environment like this. And they do one part of what Tata Technology does. So I think it's a good marriage. If you want to play the complete automotive value chain, you probably should have both Tata Technology and KPIT in the portfolio.
I don't know about you, Gurmeet, but I'm not looking forward to Alexa in the car for sure, because there's so much of Alexa do this, Alexa do that at home, and now I have to listen to those instructions in the car as well. But your jokes apart, thanks a lot for joining in and talking about Tata Technologies. The IPO opens today, so everyone will be looking forward to that one perhaps. But let's get to some 9-10 calls. The market is settled. It's flat with a bit of a positive bias. Sudarshan is back with us. Sudarshan, what's the big call at 9-10?
Well, Steel Authority is a buy with a stop under 88.
And Mitesh, how about you?
I'll go with a buy on SBI Life for targets of around 1470.
Okay, all right, gentlemen, good to get that. Thank you very much. What's a standout brokerage note for today? Nimesh is standing by with exactly that. Nimesh, hi, morning.
Hi, morning, Prashant. So today's standout is in a couple of cable and wire companies where Goldman Sachs has initiated coverage. So the first one is Polycab. Goldman has a buy rating with a target price of 57.50, a potential 8% upside from current levels. They see multiple levers to build on the already dominant market position for Polycab, and they see long runway of growth back on four key reasons. One, they expect Polycab to outpace the industry growth of 13% CAGR over the next 5 years. That's the first big reason. Second, 12,000 plus SKUs will allowing sizable presence across pan-India. Third, their entry into the high voltage segment, which can drive further growth. And last one, in the long term, they expect the fast-moving electronic goods business to add to the further levers of growth for Polycab. So that's the reason why they have a buy rating. On KEI, they have a neutral rating, initiating coverage with a neutral stance, and they have a target price of 27.30, a potential 8% downside on current levels. Now, on KEI, they believe the growth is well placed. They see limited capacity addition, which can be a constraint in the near term. From a long-term perspective, they are bullish on KEI as well, on few large reasons. One, they have a very strong presence in the high voltage cable offering, which they are one of the large players. Second, they focus on exports as well as in the retail segment. And fourth, they believe that the upcoming expansion will bottleneck the capacity for KEI. But on valuations, they have a neutral rating. But on Polycab, they have a buy with a target price of 57.50.
Okay, Nimesh, thanks very much for that. I mean, these stocks have done so well, and as Nimesh highlighted, I mean, the problem with most of these, as Goldman itself highlights, of course, is what's the valuations and where they've moved up to. Now, the government has cancelled the bid for invitation process for the appointment of asset valuer for IDBI Bank divestment. Sapna is joining in with the details on this one. Sapna, hi, morning.
Hi, morning, Prashant. So this is again a bit of a setback, maybe on expected lines, however, because if you look at the chain of events, 4 extensions had already been given to the deadline for appointment of the asset valuer. Now, we don't know the exact reasons, but there can be only twofold. One, insufficient number of bids, or bids getting cancelled on technical grounds before they open the financial stuff. So, and just to give a bit of a perspective on the IDBI Bank disinvestment, the Secretary, Mr. Tuvinkanta Pandey, in Bombay, I think on 16th of November, has already indicated that it's unlikely that the IDBI strategic divestment will go through in the current financial year. So in that sense, the government does have more time to, set the ball or rather to make it work out. Parallelly, the RBI process of fit and proper is still on because, we had tried to check up some time last month on this. We were given to understand that that process is very much on, and they are in touch with the foreign jurisdictions of the potential bids that have come in. So that process is on, but however, overall, all said and done, this transaction is not happening in the current moment.
All right, bang on time. Sapna, thanks a lot for joining in. And that's the market opening, by the way. It's flat with a bit of a negative bias. The Nifty is holding on to the 19,770 mark. The Bank Nifty is down about 80 points, so just keep that in mind. The Bank Nifty is exerting a bit of pressure on the market, just about 0.2%. If you take a look at the top Nifty losers, let's start with that because Kotak Mahindra Bank is topping the list, down about 0.8%. ICICI Bank, Axis Bank, IndusInd. The Bank Nifty has been struggling a bit the last couple of days. It's not assumed any kind of leadership, so just keep that in mind. And apart from that, today you also have the IT stocks a tad bit soft, nothing too much to worry about for the bulls. The TCS stock is down about 0.8%, and then you have something like an L&T, M&M, Apollo Hospitals, Eicher Motors that are just a little soft this morning. What's gaining though is some of these other names in the auto space. So Tata Motors is up 0.5%, Hero MotoCorp is in the green, BPCL by the way is up about 2%, and then you have something like a Wipro, Tata Consumer Products, Sun Pharma, Cipla. So pharma stocks are doing pretty well this morning, you'd have to say. But otherwise, it's a very, very quiet start. It feels like the market after a very strong run-up is just trying to catch its breath and hang around that 19,800 mark, which has been a bit of a resistance in the past as well. But lots of stocks in the broader market. So, Nigel, over to you.
Well, a few stocks that we should be looking at. JMR Power, they've acquired additional stake in their arm. JMR Energy for close to around $28.5 million. That stock, I think, has moved higher. Ganesh Ecosphere as well, that's another stock. They're looking at raising some funds on November 24th. So they're going to be considering some fundraising. That's one stock we should look at. Kadam as well, that's a big underperformer post its IPO. They as well are talking about raising some funds. So Kadam India should come up for you on the screen. IDBI Bank, well, the government has cancelled bid for appointing the asset value, and the fresh RFP is likely to be issued. So that one, in fact, is down close to around 3%. And all cargo as well, the monthly volumes are coming in at 8-month lows. The LCL volumes are down by close to around 4%. So all cargo as well has opened up with a cut of 1.5%. Sean.
Well, the market on the Nifty is turned slightly into the green. We're up about 8 points or so. And the index is just flitting around the 19,800 kind of levels. A few other names before we go any further. Nimesh was highlighting all these cable and wire companies. Polycab is coming up as the top volume-led gainer. It's up about 2%. Stocks at about 5,400, 5,415 or so on Polycab. Tata Investment Corporation is at number 2 position in terms of volumes. It's up 2%. That's an investment management company basically. Latent View is up about 2.5%. That's coming up with strong gains. Talbros Auto, it is up 50% this month. It opened 6% higher, so it basically has come off the day's high. It's up 3%, but still 50% for the month so far, and of course it's up 200% for the year. EMS Limited, I think it's locked up 5%, 454 on EMS Limited. There is Bombay Dyeing, which is up about 4% or so. Stocks at about 170. There is something called Sasta Sundar, which is, I think, formerly Flipkart Health, which is an online pharmacy. 5.5%. I think it's should be at a new high. Stocks at about, 493 or so. Look at the volumes, and that's the reason I'm mentioning that right to the word go. So big gains there. What else? Uptown and a few others come through, but volumes then taper off quite a bit very, very quickly. KPIT, I think Sonia and Nigel mentioned, it's the largest volume-led loser after the, I think, near 40% gain that KPIT has seen in the last 1 month. In the run-up to the Tata Tech IPO, it's seeing some pullback come through. So 1460 or so on Tata Tech. There was also that Kotak note, I think it was yesterday, downgrading their rating and kind of wondering what's the excitement all about with the big move we've seen there. Suzlon is down about 5%. It's the second largest volume-led loser, 37 or so on Suzlon. And IDBI, we've just mentioned that story with Sapna. IDBI is down 3.5%. Stocks at about 60 and has got decent-sized volumes for this point in the day as well. So that's the market for you. On the Nifty, we're up about 17 points or so after a slightly softish start. The divergence is still there. I mean, the Nifty Bank is in the red while the Nifty is turned into the green. Ashwini Agarwal is with us. He's founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you very much for your time. Just a quick word, Ashwini, on the market itself, which has done very well, and it continues to push higher. And you throw in the fact that global markets have also turned very positive. And the big theme there has been rate hikes behind, soft landing, rate cuts perhaps in 24. here in India, except sort of, a lot of hand-wringing about valuations being very expensive, there's not very much negative in that sense on the margin. So what's your best sense, Ashwini, in terms of what the market does from here?
So Prashant, excellent, question, because if you just think about the last 2 months, what we saw was significant global concerns on account of high inflation, high rates, and, the events in the Middle East weighing down the market. And then all these concerns seem to have faded away over the last month or so. We are also seeing very strong earnings trajectory come through. The Q2 earnings in aggregate, I think, were ahead of analyst expectations, so that's also helped. And like you said, there don't seem to be many worries around, barring the hand-wringing on valuations. Going ahead, I really don't see much concern with the market. There are events out there which might force us to rethink this view. Events like unprecedented outcomes in the state elections that are around the corner, or maybe a known unknown risk. And what I mean by known unknown risks are the fact that rates are today much higher in the Western world than they've been in the last 20 years, which can create an event which we can't anticipate. But higher rates do pose risks to various financial companies. So that's one. And the other is, all these comments the regulator's been making about the F&O market and very high retail participation in the F&O market, which is kind of, buying off lottery tickets, and which is not healthy for the market or the investors in the long run. And I suppose if there was a regulatory change that were to come about, I have no idea how that will affect the market, but might be a notch down for the sentiment. So, these are events which are kind of known unknowns, and then we have the unknowns. So those are the things that might bring the market down. Otherwise, from what we can see, I think the market's in a very healthy space.
Okay, market is in a healthy space. Got that. By the way, Tata Motors is in focus. The stock is now at a fresh record high. The stock has been one of the biggest gainers this year, undoubtedly. It's up almost 80% in 2023, and lots going for Tata Motors, whether it's the strength in JLR sales, whether it's the debt reduction, and the free cash flow positive, status that they've assumed, as well as their stake in Tata Technologies. So, Ashwini, hi, good morning, and thanks for joining in. I wanted your thoughts on some of these names that have done exceptionally well this year. Do you think there can be some follow-on buying next year as well?
Sonia, a lot of these stocks that have done well are still reasonable on valuations. Some of them have, of course, run ahead, but many of them are still reasonable on valuations. And if the earnings support is there, then, the stocks can soldier on. Over the last 15 years or so, if you look at the trend, what drives stocks is earnings momentum. That is the single common factor, across sector rotation, across market cap rotation, whatever you call it. So if there is earnings momentum, then I don't see why a stock may not do well just because it has done well in the past. That doesn't work. Valuations go off reasonable levels and stay there till the earnings momentum continues. It doesn't work for people like me who are value oriented in style, but it is what it is.
Hi, Ashwini. Good to have you on the show. Ashwini, these PSUs, many of them have re-rated, and I'm looking across the spectrum. Whether you look at the Coal Indias, the NTPCs of the world, they have been big outperformers. PSU banks as well have done well. From the PSU basket itself, what is exciting you? Is it the banking names? Is it some of these railway names or defense names?
So, the banks look all right to me, and especially the frontliners, because they've moved less. They look okay because I think the credit cycle is still very favorable, unless an unanticipated crisis on the retail credit side comes through, which RBI has, tried to temper down. Barring that, I don't really see a risk for financials, so I'm quite okay with the financials. In defense and railways, I think both valuations are stretched, and I worry about disappointments on order flow, disappointments on payments, disputes which often arise when government is your primary customer. So, those are two areas that I don't feel so excited about. But yeah, banks and financials still look quite all right.
I got that. Ashwini, any of the recent already listed companies or about to be listed companies on your radar? It's an IPO storm this week, especially. Go on.
Yeah, so this week is, I think, the biggest IPO week in last 2 years is what I read somewhere. I don't know whether the arithmetic is right or not, but that's what I read. And obviously, Tata Technologies is going to be a very hot IPO, and the other IPOs are also reasonably good quality and fairly well priced. So let's see how they trade. Given they're all bunched together, that probably is another small headwind for the market and for secondary cash market especially. But in the listed space, I'm going to sound like a repetition of what I've said before. I think the spaces to look out for is mid-sized companies where the headwinds of the last 2 years are now turning into tailwinds. What I mean is that companies that suffered from high raw material prices, high transportation costs, high logistics costs, or one of such events, over the last 2 years, those costs are normalizing. And if we can find those ideas, I mean, unfortunately, I can't comment on individual companies, but it's downstream chemicals, it's a couple of, EPC companies of a differentiated business. Those are the places that I'm looking at where your margin has tailwinds from the unwinding of high raw material prices, input costs, or transportation costs. I mean, in the pharma space, you'll find a bunch of these things. In the downstream chemical space, you'll find a bunch of these ideas. So here, I think the earnings momentum might surprise on the positive side, and valuations are still quite reasonable.
Okay. By the way, a lot of stocks are doing well this morning. Honasa, ahead of its numbers today, is up 3.5%. That's the Mama Earth parent company. It had a muted listing. It saw its own share of ups and downs. But now in the last couple of days, Honasa has been doing well. So keep an eye out on that. And not just Tata Motors, but the Tata Motors DVR is also at a fresh high. So just track that closely. Apart from that, many auto ancillaries, whether it's something like a Varroc Engineering, also doing pretty well. The others, the big thing to watch out for, Ashwini, now over the next couple of months is the elections, right? There's a lot that happens during election time, whether it's extra government spending towards infrastructure, etc. But from a stock market point of view, A, do you see this as a big trigger? And B, which are the, sectors or areas to focus on?
I don't know how to position myself from a sectoral standpoint for an elections because, yes, you're right that in the short run, the rural demand, which has been a huge bugbear for consumer companies, might receive some lift from all the spending that elections will entail. But outside of that, there's really very little to think about from a sectoral perspective. I think the big thing is to see whether the BJP actually does as well as or as well as most of us hope for, or there's going to be a question mark on who leads the next government. I mean, that the latter outcome is certainly not priced in. So back of our minds, all of us who've been around for a bit remember 2004. And obviously, all of us are hoping that we won't see a repeat of that. But that's the only thing that I worry about in some way, that, will all our calculations be laid to rest and something very different happens between now and when the election results come out around the middle or end of May, whenever it is. So that's what I worry about. But that's, I think, a low probability outcome. So one has to stay invested and keep an eye on that ball as we go along.
Okay, Ashwini, so the state elections, irrespective of the outcome, it'll be just a knee-jerk reaction for a day and then you move on?
Yeah, I don't think state elections really matter because we've seen enough evidence over the last couple of decades that states and the center, the elections are, fought by different candidates and the issues are very different and the voter behaves very differently. In the same constituency, we've seen, different vote shares for one party in the state versus the center, even when the elections have been held on the same date or, very close to each other within a span of 6 months. So I think state elections is going to be noise. And, as you say, one has to move on after that.
Okay, stay with us, Ashwini. Just want to take stock of some more stocks here, which are moving around. By the way, the market breadth is pretty positive, 2:1 in favor of gainers, and it looks good. I mean, pull up something, and these are names which were not there in the morning. KPR Mills, it's got huge volumes. I don't remember mentioning this at the right at the word go anytime recently. 8% gains, 922. And it's got the largest volume-led gainer across the board now. Not sure if there's been a block or something, but very large volumes on KPR Mills. NHPC is another one which has come up with large volumes, 3%. CDSL was not there in the when we started 10-15 minutes back, 2.5% on CDSL. Stocks at about 1770 or so now. There is Honasa, which is Mama Sonia has been talking about that, 3%, 376 on Honasa. There is Nitin Spinner. So textiles, is it a theme? I'm not sure, but I can spot at least two names which we don't usually find. Nitin Spinners and KPR Mills, both of them coming up with large volumes. Maybe we could look at, of course, the Gokuldas stock as well, which has done very well. It's past 900. It's up about 1.5% or so. So, keep an eye out in that space because there seems to be a little bit of activity sector-wise coming through. IOL Chemicals is another one which is up about 4%, 4.5%, and something like a ITD Cementation is coming up with about a 4% odd pop as well. So looking very, very strong. Ashwini, just a quick word on names like the fintech names. Actually, I'm talking about Paytm more than anything else, especially after what the RBI did late last week with regards to curbing the enthusiasm on personal loans, unsecured credit basically. And we got a range of opinion. Everyone gets impacted, but what we did here is that lower ticket size lending, up to 50,000 rupees is what gets impacted the most. That's the segment where a lot of the fintechs are in. Actually, 50 is way higher. It's much smaller than that. What's your view, Ashwini, if you have one? From the lows, of course, the Paytm stock's done well.
So, in my experience, again, RBI is usually ahead of the curve. And when RBI starts ringing alarm bells, they're obviously looking at data which is far more granular, far more nuanced than any one of us have access to. So if they're worried about something, then I think one shouldn't take that lightly. They may be being extra cautious given what happened, as early as 3 years ago. So it's a possibility they are kind of applying the brakes a tad early. Because when you speak to the lenders, they say there is no stress in the system. The 90-day past due numbers, the 60-day past due numbers, 30-day past due numbers are very, very nominal and all within control. But the leverage is certainly building up in the system. Also, if you look at the global scenario, high rates are resulting in softer growth globally in the world, and this will feed through to India via exports. I mean, the China plus one is all right, manufacturing locally in India is all right, all of that will help. But there is a broader global trend which will have an impact on India as well. So from that perspective, I think what RBI is doing is right, and I would be a little cautious in areas where unsecured lending is prevalent in a massive way, because I think these things turn on a dime. I mean, suddenly you find that the loss ratios are unacceptably high, or the stress is starting to show through, and derating can be immediate. So I'm staying out of here for the time being, and I've been out of this space for a while.
Okay, all right. Just before we let you go, I know we spoke briefly about Tata Motors, right? But overall, for the auto sector, you mentioned that valuations still look compelling for some of these spaces.
Yes.
Which are the pockets that you like? Is it specific to the electrification theme, or do you like pockets like commercial vehicles where demand is coming back in a big way? If you can just elaborate.
Yeah, it's commercial vehicles. I think that's the most interesting space. And then, a couple of two-wheelers, and even on the four-wheeler side, Maruti, I have no position there, but it's looking very interesting because the operating leverage in Maruti has always been very hard to predict. And the shift to higher value cars, as well as the softening of raw materials, which is a broader theme that I spoke about earlier, both help Maruti in a big way. So, all these auto companies are looking fairly interesting, and earnings growth is going to be pretty decent. Valuations are around median levels if you look at long-term trailing history. So they're not expensive. And if the earnings momentum is there, then the stocks will do well. On the component side, there are pockets which are still looking okay. I mean, I'm trying to stay out of auto components which have a significant ICE exposure, because there will be a shift there, and the shift will happen faster than we can anticipate. So one has to be careful about which auto components, but tires, for example, look all right. And I think again, the pricing environment there on the end product side as well as raw material side is quite supportive. So there are bits and pieces that that one can make a sense of.
Okay, all right. Well, Ashwini, final question from my end before we let you go. The hope is that maybe some of that commodity price erosion that we have seen in this year so far is reaching some level where we can see a bit of a bounce. Now, if that's the case, how do you play some of these metal companies? Because the good news is maybe the output cost, the selling price will go up. But the problem is that the input cost as well is going up. Namely, coking coal has bounced back up. Your take?
It's a dollar trade. So it's a softer dollar, which is resulting in increase in prices of all materials. And the fact that, demand has turned out to be a little bit better than expected, and output investments haven't happened globally in the last several years. So you should expect some bounce in base materials. I don't see that happening on the oil product chain, but I do see that on the base material side. I don't know how to play it. I don't play metals because there are far too many global events that shape these prices. So I don't play it, so I can't advise you how to do it. But in the short run, I think it's more of a dollar trade than anything else. Softer dollars driving up prices for all these base metals.
Got it, Ashwini. By the way, have you looked at Honasa closely, given it a look about the business model, or any thoughts at all?
It's very interesting. Yes, I know. It's very interesting, and like you mentioned, that the initial trades gave a very attractive entry opportunity. I looked at it, but I kind of didn't press the button, and I'm kicking myself for that. It's trading at reasonable valuations, about 6 times revenue, I think, now. So it's interesting, but yeah, I don't have a firm view at this price anymore.
I mean, if you want, you can still type. You can press the button. It's not as if it's run away, right? Of course, it's done well from where it came and from the lows that it made after listing. But we're in a market where, doing well is a very high bar, right? I mean, you're talking about 50-60% in a month, 2 months. That's the kind of market we've gotten used to. Anyway, we'll leave it there. Great chat as always, Ashwini. Appreciate you joining in here on CNBC TV18. And thanks very much for your perspective on a variety of issues. Now let's go back and talk about the big issue, which is Tata Tech IPO, the first issue from the Tata Group in nearly 20 years. Subscription is open today, and it's an interesting one. Rima is here to tell us more about the issue, set it up, and of course, then we'll go across to the management. Rima, take it away.
Thanks so much for that. Well, yesterday, the company raised about 791 crore from anchor investors. 67 investors participated, and you had the best of the breed in terms of domestic and foreign investors participating in the anchor book. First, the basic brass tack details. Issue opens today, closes on Friday. Price 475 to 500 rupees. At the upper end, that's 500 rupees, the market capitalization of the company will be north of 20,000 crores. The overall issue size is 3,042 crore. This is a pure offer for sale. No money which is raised will go into the company, and the selling shareholders include promoter Tata Motors, which will rake in 2,300 crores, Alpha TC Holding, and Tata Capital. About the company, now this is an ER&D company. It caters to the manufacturing verticals, but predominantly the automotive vertical. Now the company breaks up its revenues into services and platforms. So in services, about nearly 90% of the revenues are automotive, but if you look at it on a consolidated basis, about 70% of the revenues comes in from the automotive pack. Its anchor clients are Tata Motors and JLR, and for Tata Motors, they have helped with the entire conversion from ICE to electric vehicle, right from the design, the conception stage, and even integrating all the EV components into their existing base car. Financials are pretty good. The size of the company is about 4,400 crore top line, margins 18 to 19%. The company has been growing at 25-30% over the last 2 years, and there is cash in the books of $150 million. Back to you.
Okay, thanks a lot for that. Well, let's take it straight to the management then. Warren Kevin Harris, who's the Managing Director and Chief Executive Officer of Tata Technologies, is joining us now. Warren, thanks a lot for joining in. You know, there's so much interest in this company. So let me start first with the overall revenue contribution from the Tata Group. We know that the contribution from your anchor clients, which is Jaguar Land Rover and Tata Motors, is about 40%. But there are many other Tata Group companies in the areas that you operate as well, like aerospace, for instance, Air India, Tata Lockheed, Martin Aerostructures, Tata Hitachi Construction Machinery. So can you tell us what is the overall contribution from the group?
You know, we're very proud of our relationships inside of the Tata Group. You referenced the JLR and TML relationships last year. That represented about 40% of our services mix, about 33% of the overall aggregate revenues of Tata Technologies. But we enjoy very strategic relationships as well with Air India, with Tata Steel, Tata Power, and Tata Advanced Systems. And you know, those relationships we believe are not only important to us, but strategically important to the other group companies. And what we've been able to do is we've been able to use those references within the group to accelerate the growth and the contribution of from outside of the group. So, you know, not only are group companies a platform for us, you know, to drive revenues within the group, but they also an opportunity for us to demonstrate our credentials, which we then use to grow the business in areas that the group is not involved.
All right, hi Warren, good to have you on the show. You know, I'm looking for a number. What would the overall revenue from the Tata Group contribute to?
It's less than about, from a services perspective, it's less than about 42%.
Okay, what according to you is a comfortable level then of dependence on the Tata Group?
Well, if you look at our revenues 10 years ago, the majority of services that we were responsible for was delivered to the Tata Group, and again specifically TML and JLR. And yet we've seen the revenues outside of the group grow at a much faster rate than revenues inside of the group, and we expect that trajectory to continue. You know, we've not specifically put a target on it, but we expect to continue to grow our revenues outside of the group at a faster rate than we are growing revenues with other group companies.
What's the steady state of revenue growth then? What are we looking at? FY21 and 22 was affected by COVID. So technically we shouldn't be considering that. FY23 was solid. It was 23% overall, while you almost got to 30% in the first half of FY24. Is that a decent, sustainable revenue run rate?
We have built up a significant amount of momentum as far as services growth is concerned. You know, I think that's a testament to our value proposition. That's a testament to the customers that we have in different parts of the world, and I think it you know, it represents the growth that we're seeing across the board in terms of the ER&D space and the propensity of manufacturing customers to outsource services to companies like ourselves. We think those tailwinds will continue, and we certainly expect the growth trajectory of Tata Technologies to follow suit.
Well, I've been looking at the margin trajectory, and actually it's improved from around that 16.5% odd. You've been doing around 18-19%. Do you see it improving further from here?
Well, if you look at our margin trajectory, some 4 years ago we were at about 16.5%. Last year we came in at 18.6%, and that's largely driven by operational levers such as improved offshoring and improvement and optimization in terms of our people pyramid. We think a lot of the hard work has been done as far as margins are concerned, but we expect incremental improvement beyond the 18.6%. Our North Star is over 20%. That's what we are, positioning our business plan against, and we expect year on year, incremental improvement from where we are today.
So do you think that you get to around the 20%, and if yes, by when?
It would be several years, but again, I'm not going to give any specific guidance in terms of when we expect to get there.
Got it. Are there any other adjacencies that you would like to get into? Any kind of diversification that you'll be looking at over the next couple of years?
I certainly think that in the coming years, given the impact that the silicon manufacturers, the chip manufacturers are having on verticals like automotive, that there's an opportunity for us to enter high tech. I think things like medical equipment represent an opportunity. That's a regulated industry sector, and I think the work that we've done on both the digital and on the product engineering side of our value proposition will position opportunities there going forward. But we think that there's a significant amount of upside that we can continue to harvest in automotive, aerospace, transport, construction, and heavy machinery. Automotive is pivoting along the technology vectors of autonomous driving, connected services, the move to alternative propulsion systems and electrification, and the move to shared. And if you look at aerospace specifically, you look at projections, the number of aircraft that are in commercial use today is set to more than double in the next 20 years. We've recently been impaneled by Airbus. The group are making major investments in aerospace, and we expect those areas to provide tailwinds for us as an organization. So, we are first and foremost going to be focused upon the industry verticals in which we have a presence and a compelling value proposition. But we'll be open going forward to associated verticals, as I say, like high tech and potentially medical equipment.
Was in fact my next question. When, in terms of a timeline, what are you looking at? When do you think you'll be able to enter some of these new spaces like high tech and the medical equipment space?
Again, we've not put a time frame on it as of now. We will continue to look opportunistically at openings that may present themselves. But as I said before, we are exclusively at the moment focused upon the three industry verticals in which we have a compelling value proposition, and we think that there is significant upside in all three of those industries.
Well, what's the cash in books then? And as you said, you look at opportunistically at various other themes that present themselves. Any thoughts on M&A activity?
At the end of last fiscal year, we had almost $150 million on our balance sheet. The cash position continues to be very healthy, and we will be open to M&A as we move forward, particularly in the context of accelerating our capability portfolio and also entering new accounts. So we've done acquisitions in the past. We've been thoughtful about them. We'll continue to be thoughtful, but it will be it'll be part of our growth plans going forward, and we'll be looking for targets that make sense from our value proposition perspective, and also in the context of the culture that we're looking to build inside of our company.
Right. Well, final question then, and not just with regard to your business, but the street as well wants to understand this. In what way is your business model different from KPIT, which is also pretty much a pure play auto ERT?
90% of our business is auto, and in terms of business model, I think the business models are somewhat similar. I think that in the context of what's different about us, we're not an India out company. We have a balanced onshore offshore proposition, and one of the reasons that we are very protective of that, and we continue to invest in that, is the sort of end-to-end coverage that we have of the automotive value chain. One of the things that Tata Technologies is really known for is our ability to be able to develop full vehicles, and specifically electric vehicles. And in order to be successful at that, one has to manage the stakeholders inside of the companies that we work with. We have to have people in the starting studio. We have to work with the supply chain team. We have to understand the manufacturing constraints, and our onshore teams enable that. And that's a great complement to the offshore teams that we have in India and then in Eastern Europe.
Right, all the best for the IPO. It has been, caught the excitement of investors, traders across the board. So all the best for this one. Well, that's Tata Technologies, the management there talking about the growth. But overall for the market, not bad. Just hanging on to that 19,800 mark. Important to see if that gets conquered.
Absolutely. Just one more thing, what Warren said, that Tesla is a customer. That is one. I think that I don't know if that came out in the interview, but Tesla is a customer, one. And second, in an earlier conversation, he told a very interesting story. He said that Mr. Ratan Tata challenged the Tata Tech team to design a low-cost electric vehicle comparable, as frugal as a Nano. This was back in, I think 2010 or something. And in 2012, they came up with a concept EV, which they showcased in the International Auto Show in Detroit, 2012.
Yeah.
And guess who else was there at that same International Auto Show? Elon Musk.
Elon Musk.
Showcasing his Model S at that point, which was, the starting line. And then, of course, the other models came through from Tesla as well. So, I thought it was an interesting aside. Now, of course, they count Tesla as one of their clients, customers. So, interesting story in that sense. We'll take a quick commercial break here. Markets, as Sonia said, are doing just okay. We'll come back and we'll stay with the IPO rush. It's a big week. Anil Koturi is Managing Director and CEO at Fedbank Financial Services as the IPO for that opens as well today. Stay tuned for that conversation coming up. Okay, well, 35 points on the Nifty. The Fedbank Financial Services IPO opens today. Why not get you a quick primer in terms of what you need to know about the company? And then we'll hop across to the management. They're waiting by in the studios. But Abhishek is with us to tell us the basic details. Abhishek, tell us about the company.
Fedbank Fina is the issue is opening on 22nd, that is today, closes on 24th. Price band is around 133 to 140 rupees per share. The IPO size is between 1,067 to 1,092 crores. A fresh issue is about 600 crore and the rest is offer for sale. The expected market cap could be around 4,880 crore and to a band of 5,106 crore. Valuation based on Q1 FY24 numbers and the post money that they get from IPO, the price to book value will be at 2.4 times at the lower end and 2.5 times at the upper end. If you take a look, the closest peer available is SBFC Finance. So the net interest margin, return ratios and capital adequacy ratio of Fedbank is actually lower than SBFC Finance. The asset quality of Fedbank, however, is much better than SBFC Finance. And in terms of price to book value, SBFC Finance is actually on the higher side at 3.7 times, while price to book value of Fedbank is around 2.5 times. SWOT analysis in terms of strength, the cost of fund is one of the lowest in the industry, and small ticket LAP is the flagship product of the company. In terms of weakness, despite 1/3 of the book in secured portfolio like gold, RWA, that is risk weight to AUM, is at a very high ratio of 92%. Now, regular instances of frauds are there every year. Operating inefficiency is seen as cost to income ratio is on the higher side at 60% around, and write-offs have been high, which have been aiding the asset quality over the last few years. In terms of opportunities, MSME sector provides a huge potential for them to grow. There is a huge demand supply gap in the MSME segment. The threat is that the directors have interest in similar line of business and there is no proper marketing of products that is being seen over here. Back to you.
I'm sure that the management would like to push back on a lot of what you're saying in terms of especially, the weaknesses and threats. So let's do that. Anil Koturi is Managing Director and Chief Executive Officer at Fedbank Financial Services. Is with us here in our studios. Anil, great to have you with us here. Thank you very much for making it.
Thanks for having me.
And congratulations, the IPO is coming out. And, we'll give you the opportunity to respond to some of what analysts are pointing out as weaknesses. But there are strengths on the other side as well. But let's just get a basic rundown from you which is the most important segment for you in terms of lending? Where do you get your money from, which is, of course, raw material, capital for you? Let's just start there, get the ball rolling.
Sure. Now, FedFina was incorporated to serve the small self-employed customer. Okay? Our mission is to empower emerging India with easy access to loans. Now, we believe that the small self-employed customer in India is hugely underserved. Only 20% of the demand is catered to, and the rest just goes a-begging. So it is this huge opportunity that we are here to serve. Now, we believe that we have all the ingredients to cater to this segment. Okay? We are a subsidiary of Federal Bank that gives us access to a very low cost of borrowing. Last year, we were rated AA minus, and despite that, our cost of borrowing was better than a lot of AA plus kind of companies. Okay? We have a phygital distribution model, a branch network of 584 branches across 17 states in the country. We serve the customer through 3 kinds of broad products: gold loans, mortgage loans, and some unsecured loans. So we are a small self-employed individuals lender, and we cater to the small self-employed customer.
Thank you for joining us, by the way, in the studio. Happy to have you here. Can you tell us a little bit about what the growth rates for the business could look like? This whole MSME space, SME space, over the next couple of years for your business, what would the growth look like? And between gold and SME, where do you see higher traction?
So the MSME segment is getting created as we speak. Okay? Out of a total of about 6 lakh crore of loan against property, the MSME segment, or the segment that does not have proof of income to evidence by pieces of paper, is only 20,000 crore rupees. And that is a segment that has grown from nearly zero about 10 years ago, and it's only 3% of the overall industry. So it's growing, it is getting created as we speak. Over the past 3 years, we've been growing at a compounded 37% in terms of AUM, whereas our profit has been virtually doubling every year. We were at 60 crores 2 years ago. Last year, we were at 180 crore rupees. Okay. Now, in terms of the composition of the portfolio, there's going to be a bias towards small mortgages. That's chiefly because of the behavioral tenure of these loans is about 8 years. So with every passing month, the concentration of small mortgages in the portfolio will keep increasing.
So the 37% growth that you've been doing up until now, is it something that is sustainable, or is it because it's come off a low base?
Well, given the large branch network that we have, and our branch network has multiplied 5 times in 5 years, okay, and the number of people that we've onboarded, we believe that we have all the ingredients to sustain this level of growth.
All right, good to meet you, Anil, and congratulations on this IPO. We'll be interacting more often post-listing. Give us a couple of numbers then. Post this fundraise, what does your capital adequacy ratio move to? Point number 1. And since you mentioned in your introduction itself that you'll have access to low-cost funds, your NIMs, can they improve further from here on, or do you think they stabilize around these levels?
All right. First up, our capital adequacy will improve by a third. Our tier 1 will go up from about 15% to about 22% immediately after we raise funds, and that should be good enough to take us through the next 3 years in terms of asset growth.
Got it.
Okay. Now, we are focused on having good risk-adjusted yields, high spreads. Okay? Our total revenues as a percentage of our AUM are consistently between the 9 to 10% mark. Okay? Our NIMs, obviously post the capital raise will improve as you have more capital funding your book as opposed to debt.
Yes. You want to give us a quantum by how much it can improve? What is the comfortable NIM level you'll be looking at, the rough range?
Yeah, for the quarter ended June, we were at about 2.3%, and through a combination of increased capital and increased operational efficiency, we should inch to the 3% mark.
Anil, just to talk about the unsecured bit, which you spoke about, how much is that as a percentage of total AUM?
That's about 14% of the total AUM at this point in time.
And is the growth rate there been much faster? Obviously, because it's a smaller segment as well. But that's something we've seen with NBFCs across the board. I'm just asking in light of course, what the RBI said last week.
Sure. No, actually, we have consistently retained the unsecured lending portfolio at less than 15% over the past few years. While unsecured has been growing, the secured book grows even faster. That's because the unsecured book runs off in 30 months, whereas the secured portfolio stays for 8 years. So that's why the proportion of secured businesses in the book will keep increasing with every passing
On the
quarter.
mortgage side, which is what you said, the focus is, I mean, that share will keep growing. What is the ticket size and for these loans on the mortgage side?
A small mortgage customer is typically somebody who earns 5 lakh rupees per annum, and we give him a loan of an average of 12 to 13 lakh rupees.
I think now is that time when you have to address all the threats and weaknesses that Prashant was talking about earlier. One of them is, that one common concern is that your operating efficiency is on the lower side because you pay commission to agents to get you loans. Now, if you want to address that and, what the way forward would look like.
Actually, 92% of the customers on our book have been directly originated.
Okay.
And in fact, what you're calling cost, I would actually view as investments, because what we've done is to multiply our branch network 5-fold over the past 5 years. Okay? And we've gone through a transformative period of growth. Now, all this investment is going to pay off in future in the form of operating leverage. All these branches will keep building businesses. The AUM per branch will keep increasing, but the cost per branch will not increase in the same proportion. So therefore, what we've invested in the past is actually ammunition for growth and returns in the future.
So can you give us some numbers? What is the cost per branch, say now, currently? And how since you're saying you're in an investment phase, how much could it rise before it, sort of reduces?
So actually the cost per branch will stay reasonably constant. That's because, the premise is there, the people are there, the systems are there. But what's going to happen is that the AUM per branch will keep building. To give you a unitary example, let's say you spend 1 lakh per month on a branch. At the end of the first month, your AUM is 1 crore rupees. At the second month, it is 2 crore rupees. At the end of the 50th month, it is 50 crore rupees, less repayment. Say it's 40 crore rupees. So at the end of the 50th month, you have an AUM of 40 crore rupees, which the branch is supporting, as opposed to 1 crore at the end of first month. So as the branches grow in vintage, the AUM will build and the operating leverage will play out. And that really is what Fedfina is all about at this point in time.
All right, Anil, we'll leave it there. Thank you very much for dropping by and a great conversation. Good luck with the IPO.
Thank you very much for having me here.
Well, thank you very much. Well, there is Fedfina with a quick check on the business as things stand right now. We'll take a quick commercial break here. It's 10 o'clock, full hour of trade behind us. Market's doing just fine. We're up about 30 points, 19,800 plus. We come back and take stock with Mitesh on the other side in terms of any fresh trades he'd like you to take and more. Stay with us.
Welcome back. Well, for the market, you know, the Nifty is now up almost about 40 odd points, so doing pretty well. I just want to make one mention on Titan, right? Just let's pull up the Titan stock. It has hit a fresh record high, and it's crossed the 3 lakh crore market cap. That happened yesterday, of course. It's put on some more weight today. But, you know, folks, I wanted you guys to weigh in as well. In 2003, the market cap of Titan was 450 crores, and today it's 3 lakh crores.
Yeah.
So, you know, Gautam Duggad of Motilal Oswal just messaged me saying that if you had invested 1 lakh rupees in 2003 in Titan, you would have 6 crores in your account today. So, what were you guys doing in 2003?
I was almost
not investing in Titan.
Not investing in Titan. I think that's right.
You know, with regard to Titan, two things come to mind. One is for the last 10 years or 14 years that I've been covering business news, it's expensive, right? It's been expensive and it continues to remain expensive. At all point of time, it was expensive.
Yeah.
And second point of time, if after it, you know, doubled or tripled or went up 5 times and you got out, you would be so disappointed today because, you know, the stock, I mean, it's up I think in 2005 towards the end, it was 33 rupees.
Yeah.
And today it's around 3,400 rupees. So it's up 110 times from there itself. So that's the kind of move that you've seen on Titan.
You know, if you adjust Titan for all the splits, bonus, everything, right? In 2003, it was 5 rupees.
Yeah.
And today it's almost 4,000 rupees. So, okay, well, in hindsight, everyone's a millionaire.
You know, I'll tell you, Sonia, it's one of those things, right? It looks, I mean, absolutely all credit to the management of Titan and the Tata Group for creating so much value, but it's practically unknowable, right?
Yeah.
I mean, it's just unknowable. Who would have thought? I mean, the promoters themselves would not know that. They started off selling watches. Jewelry came later.
Yeah.
I mean, actually, when Rakesh Jhunwala invested into the company, they were not a jewelry company. They were a watches company. I mean, at that point in time. And slowly they kind of got into all these other segments. So, you know, it's hindsight, and it's obviously it's real, and the money is real. If you stayed invested, I think the lesson to draw, I think, as Nigel said, is quality, of course, comes at a price, so it's expensive. And the second, of course, is staying in the market, staying with good quality stocks over a period of time. But, you know, even having said all of that, the universe for Titan-like stocks, Titan-like compounders, it's not a very large list. It's not a very long list. So you've got to be mindful of that.
Also, the lesson is next time someone asks you for a piece of jewelry or a watch, you'd rather buy them the Titan share, right? You'll be better off. But let's pose this question to Mitesh. Actually, he's joining in now. Mitesh, first, any thoughts on Titan? I mean, are the charts looking as good even now? And what else is on your radar?
So I think in the short term, yes. Yesterday we had a gap up, and if you look at the gap up level, it was around 33.50. And if you look at the charts, we had a high of around 33.40 in September, and then we got a repeat high of same level in November, and then we managed to get past that high of 33.50 with a gap up. Typically, this means that the breakout should see good momentum, and a very a strong up move can evolve over here in the short term. So my understanding is that it should head towards 3600, 3650 if you give it about 3-4 weeks of time, and therefore it remains a buy. That apart, the stocks on my radar, I think I have a buy on Brokerage consumer products. Keep a stop at about levels of 990 here. Look for targets of 1050. And the other one is Bosch. I think it's moved up a bit in the last few minutes, but still remains a buy. Keep a stop below 20,800. Look for a target of 21,600.
Okay, all right. Mitesh, thanks very much for that. You know, we'll take a quick commercial break here, but on the other side, our special segment, Indianomics, my colleague Lata will get chatting with Timothy Moore, Chief Asia Pacific Strategist at Goldman Sachs, to discuss the latest report on the Indian market. Stay with us.